So today, masterclass part one, we're going to cover the strategy, how it works, how the indicator works, what we're looking for, the force of nature that drives it all, the rules that we use, and then we're going to talk about option selection. So Chris, I'll walk you through how we're picking the option so that if you want to use it on SPY, you can do that by just mimicking what I do here. Now, I prefer ticker XSP and SPX, and I'll show you guys why, but it also works on SPY. They're all the same thing for the most part, all trading the S&P 500, just a couple different pieces to them. So, masterclass part one. And then on Wednesday, I'm going to go through the part two again. We're going to go talk about the pattern day trading rule. We're going to talk about trading this with basic call options if you want to. We're going to talk about if you don't want to set a target, how to go for bigger profits. And then we're also going to talk about, and this is the coolest part, the deep dive into the sweet advantage we have on the options we use. And I think this is really, really cool. And not a lot of people know about this by using the type of debit spreads we're using. Basically, as the day goes on, as more time passes, the better our odds get. So obviously, if we get that run up in the morning, we're done. But if it's a slow, chuggy day, the more time that goes by, the better odds we end up having. So I'm going to walk you through that on Wednesday as well. And then in Masterclass Part 3, which will be on Friday, we'll talk about the 10-cent buffer rule. We'll talk about building out a full trading dashboard. Now, this is already made available to you in the members portal, the full trading dashboard. With the market internals that I share with you guys in the Telegram channel, you can have that on your Thinkorswim account as well. So then you can see it for yourself, maybe find some bonus opportunities. And kind of it might be a good gauge for some of your other positions you have. We'll also talk about additional rules for increased profitability, primarily looking at the VIX. As of yesterday, we're now 10 for 10 when the VIX has spiked more than 10% overnight. And when I say yesterday, excuse me, I mean Friday. But when the VIX increases, typically we make more money. We'll walk through that on Friday. I'll walk you through the 60-minute morning checklist for those of you who want to learn and trade this on your own. And then how to target even more profits from other stocks available. We'll do that on Friday. So let's do Masterclass Part 1 here. And again, guys, I'm going to try to keep this going. And I've got a few stopping points in here where I'll say, all right, let's answer some questions. So promise I won't leave you guys leave you out to dry in the chat, but I can't stop for every question or we'll never get through this. So today I'm going to break down the backstory of how this trade came to be. This will be some repeat. If you watch the presentation, you'll see some repeat information in here, but it's good that you understand it. And I'll walk you through the exact rules for entry and how to use the indicator for yourself, plus the basic option selection and profit target that we're using. Then in Masterclass Part 2 and 3, I will cover more additional fun details that really help us amp up our risk to reward, profitability, all that good stuff. Now, first thing is first. Make sure you're in the private Telegram channel for entries and exits. Is anyone here not in this? And this is way too big. Got a private Telegram channel, 60-minute income by Graham Lindman. It's where we post entries and exits. I mean, it's an automated exit, but you guys can see when I post when we've hit. Make sure you're in there if you are not already. And when joining the Telegram, you must enter with your first and last name on your membership, or else we will have to remove you. And I hate to call someone out here, but the team is going through today to remove people. So, for example, I don't want to be mean to anyone, but like here's someone, Henry. Henry, we don't know your last name. Unfortunately, we're gonna have to remove you from the channel so that you can enter with your first and last name. We've got some other people like CQ. We don't know who you are. At A, Ken, you're going to be removed. So please make sure you have your first and last name in the channel. You might have to go to your Telegram settings and edit that, but I'm giving you a fair warning that if you don't have your first and last name, you are going to be removed. You will have to go back and enter the Telegram again. So I've given you guys my fair warning there. Now, here's how the Telegram alerts will look. So if you're new, let me walk you through each and every day. Number one, and this is kind of optional. Some days I do it, some days I don't, but a lot of times at the market open, I just give you I drop in a quick market analysis, a screenshot of our dashboard, which again, you have access to this in your members portal for free. I included it for free, which gives you the VOLD, the ADD, the tick, which we'll talk about these on Friday. Gives you a screenshot of the internals, plus our main ticker, SPY, XSP, SPX. And then I just give a little blurb here of what's going on in the markets. Now, again, I don't do this every day, but if I do, it'll be right at the market open, just a quick nuggets. Then this happens every single day, right around 9:45 a.m. 9:45, 9:46. This is our opening range game plan. So once our opening range is set, and I'll walk you through what that means in a moment, you get this game plan. This gives you the options we will be trading that day. Now, note, this is not an official entry. Try to make this very clear. Not an official entry. These are the two routes we can go once we get confirmation. Again, net debit, not credit, and I will follow up as soon as we get confirmation. So these are the two. If we get a bullish break, these are the options we're trading. If we get a bearish break, those are the options we're trading. I just want you to have them in advance. Now, 99% of the time, this will be what we go with. On the rare days where we get a massive move, we may need to adjust these. But generally speaking, this will give you the game plan of the options to roll with. Then next up, we get the entry signal once we close above or below, confirming the breakout or breakdown, and I follow up right away. Yeah, this happens every 5 minutes rolling. I'm going to walk you through that in a moment, but this is our official entry. When you see that green bulb here or that red bulb, that means it's go time. We're placing our trades. We're rolling with it. And then in a few minutes after that, once I get filled, once we calculate the profit target, I will follow up with exactly what I got filled out or filled at, and then the profit target I'm using. Of course, if you got filled at a better price or worse price than me, I'll walk you through here in a moment how to set your profit target. But very, very easy way to understand it is you just take your fill price and multiply it by 1.5. That gives you the 50% profit target on the options. And then I'll post in the chat as the day develops because I love this trade. I know we say in the promotion, you set it and forget it, go to the gym. I could do that. I should do that. I have too much fun. I watch it. I have a great time and I love sending you guys updates. So I'll do that here. So hopefully you don't have to go check it all day yourself. You can just follow along when I post in some updates. So how does it all work? Well, let's dive in. Again, and this is going to be a little bit of repeat and then we'll dive into the details. So here's how it all started. It all started when we uncovered what we call the opening candle continuation pattern, one of the most accurate predictors of market direction. You guys probably remember seeing this data piece. This is a 30-minute, based on the 30-minute opening candle. When the 30-minute opening candle for the day is green, markets go up 3 out of every 4 times. On the flip side, when the opening 30 minutes is red, markets tend to go lower that day. So in most cases, you can pick almost any random day and see what I'm talking about. Opening candle is red. And again, this data is based on 30-minute candle. We don't use 30 minutes, but that is the foundation of how we built this strategy. So here we go. Opening candle red, market closed lower. Opening candle green, markets closed higher, right? Opening candle green, not every single time, but 3 out of 4 times, that means markets are going higher. So we began testing it and we confirmed the data. However, I'm an options trader. I mean, we could trade stock on this and go for 0.2%, 0.3% and see how that stacks up over a year. I'm sure if you have a ton of money, that would be awesome. But for options, we want to go for leverage. However, holding short dated options through the whole day really ate at our profits as time decay really rips an account unless we get a huge move. So there are those exceptions where the S&P really goes crazy and moves fast, and call option, put options can crush it. However, more often than not, even like today was a great example. Let me pull up today's price action. You can see we got our buy calls and then it kind of just grinded from there. Not a big move, just a grindy move. Well, most call options would have lost value between here and there, the short dated ones, because it really didn't move fast. And that was a big problem. But we quickly realized something really remarkable. The 60 minutes, we'd say 60 minutes, really the morning following the opening candle gives us the most powerful results because that's where most of the market continuation happens. So again, red candle typically means down day. In the first hour here, you can see the continuation. And then from there on, it doesn't really matter to us, but in this case, it chugs sideways. Same thing the upside. Green candle, typically green day. And there you can see the continuation. And that's where the markets finish. It didn't follow through the rest of the day, but the morning was where the money was made. So again, as you guys remember, when the opening candle is green, that means buyers. People are buying, and typically we see that buying trigger more buying in the morning. When it's red, selling typically leads to more selling. So we began testing this with options Omega. And if you've been coming to the opening playbook, you have seen us do some testings with option Omega. Actually, just curious, has anyone here not been attending opening playbook? Give me a no in the chat if you've not been coming to opening playbook, because I need to set you on the straight and narrow if that's you. And it might be because you're if you have job or something that conflicts, I get it. But if you don't, if you're not at work, or if you have some spare time, every single morning, 10 a.m. Eastern, I'm live with Nate. Nate and I are live. We're doing market trainings. We're doing strategy training. We're doing strategy building testing, looking at market internals, all sorts of stuff. So if you don't know about it, it's every single morning at 10 a.m. Be on the lookout in my main Telegram. I post a link, so make sure you're coming. So we began testing this strategy with option Omega, like we typically do, like we've been doing. If you guys have been following along in opening playbook, you know that monster strategy Nate's been slowly building and developing for us. That was with option Omega. And since the inception of SPX, which is the main ticker I trade, since it was listed in 2013, 86% win rate. Same exact win rate we saw in the testing, and insane account growth. And there is just a fun note for you guys here too. So this is 13 years of data. This is obviously a great number. No one's going to complain about that number. Keep in mind, daily options weren't even available, like zero DTE every single day. Were not available until 2022. So like the first 10 years of this growth was based on taking maybe two trades a week. We're now getting 4 to 5. So the insane growth really happened over the last couple of years as those zero DTEs got listed. So really, really cool. Now for us, it really does not matter if the opening candle is red or green, because we structure the trade where either scenario gives us a way to trade it. Remember the opening range game plan. I'll just flip back here. Where did I put it? We can trade it both ways. We can trade a bullish breakout or bearish. We just need a confirmation. So let me continue down here. Again, in this case, green candle, buying response, we make money on that move. After that, we really don't care once we're out, like today, we're on everyone should have hit today. Markets are chugging along really nicely this afternoon. Now they could tank going into the close, and it doesn't really matter if we hit our profit target. Now, like I said, most of the continuation happens following the opening candle, and based on our testing, by using that morning market action, our accuracy increases from 75% to 86, 87%. And then we just structure the trade where a few ticks in either direction should be good enough to produce a successful outcome. Now, of course, sometimes it could take a little longer to hit our target. We don't always hit it before noon. A lot of the times we do, but we don't every single time. So don't freak out if noon rolls around and we haven't hit yet. Some days where there's higher implied volatility in the markets, it does take a little bit bigger of a move or some more time. But I made many profitable trades on this strategy with ones that took a little longer to hit. So don't freak out. The key is just sticking to the system. Now, most of them hit before noon, but not all of them. Now, the key here is how we structure the trade. So now that we have a basic understanding of we're looking for opening market continuation, let me first take a pause here to check the questions, and then we'll dive into the entry signal, how we do the trade, all of that good jazz. Andy says, great program. Love it. Making money. Thank you. Buy to open for AUG 25, call 25 represents the year. So it's 4th of August, 2025. Love SPX. Awesome. When would I not take a trade? Tom, great question. We will cover that here in a moment. All right, I think I'm all cut up. So how does the entry signal work? Well, I've coded up and fine-tuned a custom indicator to give us our signal. And yes, you have access to this in your members portal with an install video to get you started. Keep in mind, you do not need this indicator if you don't want to. If you'd like to just get the options spoon-fed to you with the entries and fill price, exit price, no problem. That's what I'm here for. I want to make your life as easy as possible. I know some of you really love doing this trade on your own, so I wanted to give you the indicator too. Now, this indicator specifically works on SPY, XSP, and SPX. So if you have the base level indicator, it just works on those main tickers. That's how it was developed. If you have the unfiltered version, it works on any ticker. But for now, let's focus on the main ones, the S&P 500. And it specifically only works on the 5-minute charts. So if you have 10-minute candlesticks up, it's not going to show up. If you have 30-minute, not going to show up. Daily, an hour, it only works if you have the 5-minute candles open. That's because that's what the testing showed best. So it's not going to show up on any other time frame. So each morning, our indicator tracks the high and low price of the S&P 500 in the first 15 minutes of the day. So the high, that's that wick, right? That high wick and the low one. There wasn't much of one here, but that's what we're looking at here. The high price and low price from the 15-minute range. So that's 9:30 to 9:45 a.m. Eastern time. We only care about the first 15 minutes. Then we simply wait for the 5-minute candle to close above or below that line to give us our direction. Are we going bullish? Or are we going bearish? Now, keep in mind, I do not like jumping in early. I like to wait until seconds going into the end of the candle period to jump in. So, it could be 9:46 a.m. This could come all the way up here. A lot of people jump in and then it would fade it. It could potentially fade it before the 5-minute candle closed. And now you look like a sucker who bought in early. It doesn't always happen, but it can happen. So again, we just want to wait on the 5-minute rolling period to see where we're at. So for just simplicity's sake, the first entry alert can come at 9:50 a.m., then 9:55, then 10, then 10:05, 10:10. Just 5 minutes rolling, we just check where the candle is closing. And as soon as we get our entry, we place the trade and we're done. So once the S&P closes above or below that high or low number on the opening range, we get our entry. It shows up on the charts too. So you can see here, it closed above, buy calls, pretty easy. In this case, we are long with the call options, trading for a continuation higher, right? And when it all works out, we have a good chance to hit our profit before lunch rolls around, just like what happened today. And it works the same way to the downside. Again, high and low range are marked from the price action between 9:30 to 9:45 a.m. Eastern time, the 15-minute range. And then we get the high and the low. Now you may notice there's a little line outside. We will cover that in Masterclass Part 3. But for now, just focus on this gray area, high and low price. When we close, when the candle closes, the 5-minute candle closes below the lows of the morning range. That means we have a continuation lower and we buy puts. And when it all works out, have a good chance to hit our profit before lunch rolls around. Again, 50% ROI like we do each and every day. Now here, let me just take a stop here because you guys may look at this and say, hey, Graham, you said if the opening candle is green, markets tend to go higher. Opening candle is red, markets tend to go lower. That's not what's happening here. Well, two things to that point. Number one, that data was based on the 30-minute chart. So we're looking at 5-minute candles here. If you look at the 30 minutes, that would be 1, 2, 3, 4, 5, 6 bars. This is a red open. Do you guys see that? It's technically a red open, even though we're looking at 5-minute charts. If you look at the open and current price, it's below that. So it's a red open, continuation lower. Secondarily, that data set is winning about 70% of the time. We have a couple other tweaks here that help increase our accuracy. So it's not always going to line up apples to apples, but generally speaking, that is the phenomenon we're trading. So hopefully this makes sense so far. Let me go ahead and read the chat. Don, first trade today, first win. Thanks. Thank you. Brandon made 2K today. Awesome. That would be August 4th, 2025. Yes. The reason I list it like that, we got a question about the expiration. So like if you open Thinkorswim, that's how it looks. 4 Aug 25. So I want it to be very easy for you guys to find. If I wrote August 4th, 2025, it wouldn't match up 1-to-1 in here. He was asking about the strike, sorry. How much does SPX have to move to hit our 50% profit target? Great question. We're covering that in part 2 or 3 of the masterclass. But normally, generally speaking, 0.2, 0.3%, somewhere in that range. Why do I include the wick and not the body? Our opening range technically includes both the wick and the body. for the high and low price. It's just the total, the max high and max low of the range. The earliest we can get a signal, Chris, is 9:50 a.m. Eastern because we take that first 15 minutes and then we wait 5 minutes for the next candle to close. So that would be 9:50 a.m. Eastern would be our first potential signal. Doesn't always happen right then. Like here, for example, that's at, what is that, 10 a.m.? 45, 50, 55, yeah, 10 a.m. in this example. Do I use a trailing stop? We will talk about that later. And the short answer is no. Awesome, got filled. All right. We're awesome, Pete. 720 bucks. Love it. All right. So I think we're all on the same page so far. Now, a couple of pointers before we move forward. Number one, again, we let that 15-minute opening range develop. We don't enter early, or, just because the market shoot up. I mean, today you could have, and you would have looked like a genius, right? Let me just pull up today's price action just so, like, this morning got really exciting at the open. Markets opened higher and just went crazy. A lot of people would be tempted to buy right away. In this case, it would have worked out for you, right? Markets kept going higher. But in other cases, that doesn't work out. Let me show you another example. Like here, opening range, you're thinking, oh man, we're bullish. Let's ride this. And then ba-boom, goes against you. So we want to wait for that 15-minute range to develop and give us a high and low price. Now, once it's developed, again, I send you both the call option criteria, the bullish options, and the puts. We do not trade both. We never trade both at the same time. I just want you to have both easily accessible for when we do get the confirmation. And then note number 3, again, wait for the 5-minute candle to close before jumping in to avoid false signals. Of course, I do that, and then I send you the entry. But if you're using this on your own, typically you want to wait for the candle to close. Now, if it's crazy high above it and you want to jump in early, be my guest. But typically you just want to wait. So as a reminder, here's how the telegrams look. Morning market analysis. Then you get the opening range game plan. This gives you everything you need to know for the day. And then once we get a candle close above or below that range, bam, I follow up with the exact options we're trading. And again, green, I make it easy for you guys. Green, we're trading bullish, we're trading calls. If this were red, it would be bearish and puts. And again, we're always entering for a net debit. And then a few minutes later, I'll follow up my fill prices and the profit target and trade details. And then I'll give you updates along the way. Now, next up here, let me just go ahead and pull up my chat here, make sure I didn't miss anything crazy. This is being recorded, Scott. Yes, it is. Good question, iPhone. Does the body need to close above or below the range? Yes, the body does, not the high or low wick. Johan, this is available for TradingView. The link should be in your members portal. Let me know if it's not in your members portal. Mike, what kind of win rate does the 5-minute open have for comparison? We can have some fun and test that today if you want to. The 15-minute was the best. I don't remember the specifics on the 5-minute. Here you go. I just looked in the members portal. There's the indicator for TradingView. Here's the Thinkorswim. Here's TradingView. All right. So next up, you may have noticed that the Telegram images, a lot of times I send you 2 charts. I show you the SPY and the XSP at the same time. You might say, well, they're the same thing. Why do we need to see both? Well, both do trade very similarly. They both monitor the S&P. However, SPY has dividends. They all, it also closes later on the options market. And we do sometimes see some small, very small price discrepancies where one will fire an entry signal, but the other won't. So before ever placing a trade, we want to see both of these agree. Now, there have been 4 instances in 2025 where they did not agree. Actually, I think there's 5 now, and it would have been a loser. So there's been 4 instances that I know of where they did not agree. AKA one said buy calls and the other one didn't say anything. Or one said buy puts and the other didn't say anything. 3 of those signals were losers. That's why I prefer to wait for double confirmation that both agree. So for example, June 26th, I actually traded this. This was when I was still testing it out. There was a put signal on XSP, but do you see a put signal on SPY? No. So it was not double, there was not confirmation on both. XSP fired because of a small price discrepancy. I did puts here and I ended up losing. And then I went back after this one because, like someone asked, have I ever noticed any common threads with the losers? This was one of those common threads I noticed. When they both didn't align, you end up losing more often. So instead, the key is wait for both to align. Calls, calls. Okay, now we have double confirmation, and that was the correct move of the day to trade bullish. So again, we don't want to just trade when one of them gets an entry. We want both XSP and SPY. So in the next masterclass, I'll show you how to set up the dashboard, the full thing, so that you can mimic the charting view and a few other special pieces too. And guys, keep in mind, I've already recorded it. So if you don't want to wait for Wednesday and Friday to cover it, go into the members portal, catch the recordings from masterclass part 2 and 3. And I hope those are in there. Let me go see. Masterclass part 2 and 3 are both in there. Deanna, we do need it looks like we need a cover photo. Well, maybe it's not a cover photo. I don't know, but they're all in there. Here, look. So go watch part 2. I think it's actually part 3 that you want to see if you want to set it all up. All done, all ready for you. But first, let me cover why we trade the options on XSP and SPX and not the SPY. And keep in mind, it used to just be XSP, but I showed you guys SPX is better. So we started including that too. Hopefully you guys appreciate that and it hasn't been confusing or anything. Let me know if that including the SPX has caused any issues for you guys. But while you do that, let me just cover the details. So here's our 3 tickers. They all trade the S&P 500. What are the pros and cons of each? Do they all have 0 days till expiration available? Daily options. Yep, they all do. Do they all have very liquid options? Yep, they all do have very liquid options. Are they all cash closed, or can you be assigned shares? Well, with the SPY trading a spread, you can be assigned shares, meaning you could, if it finishes in the middle, you could be exercised and you could have 100 shares per contract of SPY, which isn't always a bad thing, but it can freak you out when you wake up and you have $400,000 of S&P in your account. XSP and SPX, however, are cash closed, meaning there are no shares traded. You will never wake up with $400,000 of shares because they don't exist. Instead, like I was showing you guys at the beginning, depending on where the price closes, it will just give you the exact cash amount for that value. Very easy to trade, makes it so seamless for traders, options traders, where we don't have to worry about all of that stuff with getting exercise. Also, SPY is not tax advantaged. Every time you trade SPY under 2 years long, you're going to be paying short-term capital gains. With XSP and SPX, however, they do get a tax advantage, where it's 60% long-term capital gains and 40% short-term capital gains. So depending on your tax bracket, that could save you anywhere from a couple hundred to a couple $1,000 a year by using these tickers. Now, if you were like, I think it was Scott, I can't remember if it was Scott or someone else, they're trading in their retirement account. Well, that doesn't really factor so much for you there. But for those of us who are just trading in a normal brokerage, the tax advantage is awesome. So there's big advantages to trading the XSP and SPX versus SPY. The biggest one, in my opinion, is not getting assigned shares. I think that freaks everyone out. This is just a little cheat sheet for you guys. This doesn't include every brokerage, but the ticker SPX and XXP are different for some of the brokerage accounts. So like E-Trade, it's $SPX or $XSP. Obviously, Fidelity, it's period SPX. So there's some different variations. Feel free to take a screenshot of this if you need it for your brokerage, if you're having a hard time finding these tickers. They should be in there. They should be in every major brokerage. But sometimes they, for whatever reason, a little bit different. Schwab isn't on there, but Schwab's on, like Thinkorswim is SPX. But if you go online to Schwab, I think it's $SPX or period SPX. Anyways, you can just Google it too if you have some questions. So now let's dive into the option selection process. How do we actually pick the options? If I weren't here, how would you do it? Let's walk through it. So these examples will be on XSP, and in the later master classes, I'll walk you through SPX, which is a little bit different, but basically the same. But let's just start with the XSP now for simplicity's sake. So for the option selections, the optimal results came from using what I call the wrap order. I hope you guys were able to attend opening playbook last week. I covered the wrap order. It's what I use to trade most of my strategies. And it actually, we didn't just test this, and I said, let's do this one because it's my favorite. And I've got an ego and I want to trade it the way I like to trade. No, we tested all the different, many different options variations. The wrap order came back as the best one to use. So the options we use are a simple debit spread. So yes, you'll need level 2 or 3 approval on your brokerage, depending on which brokerage you have. And I have a short write-up in the members portal on how to get approval if you want the easiest way to get approval. But we are using a debit spread. Again, don't freak out. If you've ever bought a call before and then sold a call later, you've done all the work that you needed to do a debit spread with. The only thing now is we're just doing it at the same time. So this is the best way to trade this, in my opinion. However, if you don't like spreads or have issues with them, I will show you how to use basic calls as well. So for those of you who really just don't like spreads, don't worry, you can still trade this. Now here's a quick theoretical breakdown of how it works or how we're picking these options. So again, we're always using the 0 DTE expiration. That's today's date. So if you're ever confused what expiration we're using, look at your calendar and you see the date. Bam, your problem solved there. Now, visually, we are going to wrap the price of a stock. So if we're going long, and let's just say for just simplicity, XSP is at $100, and we're going long, we wrap by buying the lower call and simultaneously selling the higher call. Does everyone see how we've just wrapped that into a nice little burrito, covering both sides? Hence the name wrap order. So again, you always buy the one lower, sell the one higher, and that's going to give you the net debit. Now, the typical entry cost is anywhere between 48 cents to 58 cents net debit to get in, and we enter it on all one ticket. So I don't buy it, fill, and then go sell it and fill. I do both at the same time as a vertical spread. Keep in mind, you don't have to go pick the options on your own. I do it for you, but if you want to learn how I do it, I'm walking you through it now. So let's walk through some real life examples. Again, I do this all for you already, but I want you to learn it because I like teaching you how to fish. So July 14th, we were long, right? We had the buy call signals. We are going long. We can see the price here, 625.53. And now we're going to wrap it by using that day's, the same day expiration. We're going to wrap the current price. So how do we wrap it here? And I don't remember if this is the quiz for you guys. No, this is the quiz. So how do we wrap it? We're going to buy a strike and we're going to sell one. Current price is 625.53. We're going to wrap it like a burrito. Dean likes that, so we're going with it. Bob's got it. So we're going to buy the one strike lower, one strike in the money, 625, and we're going to simultaneously sell one strike out of the money. So here's the current price, and we've just wrapped it like a burrito. We're going to enter it all on one ticket. And here was my trade that day. Bought the 625, sold the 626. I got in for 52 cents. We'll talk about profit target here next, but let's do this again. Let's do another practice. So June 27th, we're going long. Buy calls. The price of the stock is $616.40. So we're going to use that day's expiration, 27th of June expiration. And now we're going to wrap it. Any guesses on how we're going to wrap this? I could go for a burrito right now, so I'm just going to keep talking about that. It'll make me even hungrier. We're going to buy the 616, sell the 617. So the current price of the stock, in this case XSP, has been wrapped. We enter that all on one ticket. And again, typically entering between 45 cents to 60 cents. This one was 54 cents net debit. So quick breather here. Did that make sense to everyone on the wrap order? And hopefully that maybe catching name helps you figure out what to do with it. And that's also, guys, how I trade all of my, not all of them, but a lot of individual stocks that I trade. Same exact process. Just think of the burrito, and you can do it too. When you are close, pennies to one side or the other, what do you do? Good question, iPhone. I will walk you through that here later. But that's where it can become tricky. You can either widen your strikes out, or you can go it's too much to explain right now. But like if it's in this case, if the price was 616 and 1 cent, and I did this, my entry price is just gonna be like 40 cents. So I'll just have a much cheaper fill, but I need a little bit bigger move. All right, sorry, I don't want to distract. All right, let's talk about profit target here. Once we get our entry filled, we then want to go ahead and set a sell order, a closing order on our options for that 50% profit target. So once we're filled, we can then go ahead and sell it back at the price we want to get paid for it. This allows us to set it and forget it as we let the market run its normal course that day. So once you are filled, you would then go into your brokerage, click on the position you just entered, and then just click close or sell or exit or whatever your brokerage might say. But before you ship it off, you need to set the price that you want to sell it for. So we just entered, and now we're going to set our 50% target. And here's the easy math behind it. You just take your entry price and multiply it by 1.5. So if we entered at 50 cents, we multiply that by 1.5. We want to sell it for 75 cents. That's going to give us a 50% profit. If we entered at 52 cents, we're going to take that number, multiply it by 1.5. That gives us 78 cents. So we would set our limit to sell at 78 cents. Now let me throw you a trick curveball question here. What if you entered at 53 cents? Well, you multiply that by 1.5 and you get 0.79 and a half. An odd number, you can't sell it for 79 and a half cents. So we just round up. So you'd set your sell order at 80 cents in this scenario, which would be about 51% return on investment. But I always round up when it's an uneven price. Then you can go ahead and ship it off for the day and then close the charts, knowing that if the target's hit at any point in the day, you should get filled for that 50% target. You don't even need your brokerage account up on your screen. You can exit out and it's set orders with it. Now, again, I do this all for you in Telegram, so no need to stress. But I also know that, like today, for example, I got filled for 245. A lot of people got filled for 235. So you might, if you want to do that 50% profit target, you're going to have a different exit price. You're going to have a better one than me. So what you do is you say, I got filled for 235. I'm going to multiply by 1.5. There's your exit price. In this case, you would round it up to 355 on SPX. So you got much easier one to hit than me. But that's how you do it. Very easy times 1.5. Rafi, do we set it as good till canceled? Yes, you can, but it really doesn't matter because there's zero DTE options. So it's either going to close today or it's not going to exist anymore. So a day order or good till canceled, either would work just because we're using zero DTE. Now, of course, it's the same process for doing the wrap order with the downside, except we're just going to buy puts instead. So now we're going to buy the put that's in the money and sell the put that's out of the money. We're going to wrap it still. So here is July 7th. We got the put, we're trading to the downside. There's the current price. The only difference here now is we're going to buy the higher put and sell the lower. So if we're trading upside, we're going to buy the lower, sell the higher. We're trading the downside, so we're flipping it. We're going to buy the one that's in the money, sell the one that's out of the money. So again, using that same day's expiration, we're going to buy the 625 strike and we're going to sell the 624 strike. So we have wrapped the burrito yet again. Again, this should show up as a net debit. If it shows up as a net credit, you probably accidentally did it backwards. That's okay. Just make sure you confirm it's a debit before sending it off. So in this case, and this kind of plays into that last question, what do we do when it's pennies there? You just probably get a cheaper entry. So in this case, I got in for 41 cents. So then I got filled, and then I take my price, 41 cents times 1.5, and I know my exit is going to be 62 cents. So I can go and just set that in my account. And then once the order was hit, once the markets moved lower that day, bam, I was out with a profit. No questions asked, no problem. All right, let me take a quick breather here, and then we'll keep on chugging along. Tom, could you also sell calls? Yes. If you would prefer to do a credit spread on this, you absolutely can. It's going to be about the same risk to reward ratio. But for simplicity's sake, I use a debit spread. Glenn, both would be, yeah, if we're trading the downside, exactly right. Both are puts. We're going to buy the more expensive put, sell the cheaper put, which allows us to offset that intrinsic or extrinsic value, offset a lot of implied volatility. And as you'll see in the later masterclass, our profit zone increases as the day, it improves as the day goes on. Do you think the buy will go through today? So I won't have to use a day trade. Oh, Patrick, you're in right now, you're saying? I can't predict the future. I can tell you this, Patrick, that the Vold looks very strong today. Advanced decline just took a breather this afternoon. But my strikes, if you didn't get filled already, 631. You look pretty solid right now. 6310. Again, you look pretty solid right now if you're going to let it expire. I can't predict the future. But if you want to go for that bigger profit, today seems like a solid day to be doing that. All right. Sorry about that tangent. Do you always take the immediately higher and lower strike even if the market is almost at one of the strikes? Okay, Chris, let me go ahead and answer this question. All right. That's a great question. So let's look at XSP. It'll be easier. So let's say today price was 630.30. That makes it easy. We're just going to wrap with the 630, 631, right? Let's look back here. And I'm honestly just going to do this till we find one. All right, here we go. So this one price when it said buy puts was at 623.12. So technically you would be buying the 624, selling the 623. However, since it's pretty close to 623 versus being in the middle would be, 623.50, what you could do is you could just extend your spread. You could just make it buy the 624, sell the 622. So now you've wrapped it again. Is that my line still there? Just delete that. Let's keep going. So like here's one here. This one's pretty much in the middle, 638.59, easy wrap, buy 638, sell 639, and your job's done. But hopefully this makes sense. And then the reason, and I don't think I spend too much time in this masterclass on it. The reason I like SPX better is because it moves in $5 strikes. I mean, I do this all for you guys, so please don't get confused or worried about this. But because it has $5 strikes, like today, it moved a little bit against me at the beginning. But instead of doing like the XSP, you have to do 630, 631, which is pretty wide. Today, and again, forgive me, this isn't a perfect example because I sent it out when it was up here, but based on the closing price here, you could do 6,300, 6,305. So you can see how much tighter that is versus the XSP is like this range where you need it about up here. And then with the SPX though, you only need it about here. So you need less of a move to hit at the end of the day. Sorry, that was a very, very quick and rough walkthrough of that, but hopefully it answered some questions. How do you trade a debit spread for puts in TradeStation? You would buy the more expensive put, sell the lesser expensive put. Same way you would do it in any of the other brokerages. If someone doesn't have level 2 yet, what do I recommend? I'll walk you through the basic call and put options. I think in this class. Actually, I don't think I do it in this class, but let me just show you it real quick. If you don't have level 2 and you want to start trading this, basically what you can do is take the buy side of the call or, of the spread I've given you. So there's buy and sell. You would just take the buy side, add 7 days to the expiration. So in this case, you would buy 21st July, 625 call. I cover that in the next masterclass. So if you don't like spreads, you don't have, a brokerage that can trade them, you can just add 7 days to the expiration and do the buy side. But before you do that, let me answer some questions, or let me cover this as well, because I personally think it's absolutely worthwhile getting a brokerage that will allow you to trade these debit spreads. I don't know why some brokerages make it so hard. These are always risk defined. In my opinion, they're safer than trading calls because you save money on time decay. But some brokerages make it hard. I think it's totally worth it to figure it out now versus down the road. Do I find SPX Makes the target faster than XSP. Doug, on about 3 of every 4 trades, yes. There are some exceptions where XSP hits first, but generally SPX makes it faster. Oh, interesting, Brandon. I will have to look into that. I have not seen that, but I will ask them. Uh, Brandon, do you use Thinkorswim? I got them to take my contract fee down from 65 cents to 35 cents. I just told them I was switching brokerages unless they can get me a better contract fee. So you might be able to do that too. Just FYI, if anyone uses Thinkorswim, their support and chat is really, they have a great support team. I love it. They're so quick to respond. But yeah, you just tell them, hey, I'm thinking about switching brokerages. I love trading in this, but it's just so expensive. Can you give me any better deals? Um, let's see. Is it advisable to add contracts when the entry price goes better than the original entry? Sheila, that is up to you. I put in 5 grand a day. I'm not really adding to it, regardless of how it first starts. Does the bid ask spread change after we enter or stay the same until close? If Dean, if you're asking about the prices, the prices will change all day long. Thanks, Bob. Oh wow, you're at 30. George says he has 30 cents with Schwab. I have 35 cents, Brandon. There you go, Sally. Just use vertical option. Number of options to make $1,000 a trade. Jesse, if you do SPX, it's about 4 contracts. And well, I just started downpouring outside here today, so that's fun. All right, we've got some questions. What if I like just trading calls? What if I don't want to trade the debit spread? You can do whatever you want. You have full power to do that, and I encourage you, more power to you. However, I will just tell you this. I'm not going to sugarcoat anything. Trading the spread is by far better in almost every single scenario. The only case where the calls are better is if we get a crazy market move. A lot of times that means like news, unforeseen news happening. Then the calls may be better, or calls or puts. However, debit spread makes more money over time. So debit spread, lower cost of entry. Debit spread, it limits time decay. When you're buying basic calls and puts, you are paying mostly for time decay. That just eats your account up. Debit spread, it pays. We can hit our profit even when the S&P barely moves. For example, right now, the SPX or XSP is only up about 0.2 from our entry, 0.2%. If it were to close here and you didn't even hit your profit target, or if you didn't have a profit target, you would like double your money on a 0.2% move. Call options would lose like 80, 90%. So when we get more grindy, slower days, debit spreads win. Which one has a better win rate over time? The debit spread. It wasn't even close. It was like 60% versus 86%. And more overall profit over time, the debit spread. No, hands down, no questions asked. So I don't mean to dog on people who prefer trading calls or puts, but I'm just going to tell you, if you look at the numbers, if you look at the math, it is definitely worth your time investing in yourself to learn about the spread or find a way to get them improved in your account. I can just tell you that firsthand from my own experience and from seeing the numbers. All right. We got a bunch of questions that popped up there. Dan says, tell broker that you're experienced and went level 2 and usually get it immediately. Dan, that was my experience as well. Jeff, the price one can negotiate is a function of one's trading volume. That is true. I've had brand new accounts where they bring it right down too, though, Jeff. I just tell them I'm going to. The alternative is you tell them you're going to start trading a lot in there, and they bring it down for you. All right. Interesting, Ronald. I would look for a different brokerage. This is again, you all make your own decisions. I'm just going to tell you that based on the numbers, it's just far superior. How do you get around the day trade restriction in Thinkorswim? Randall, go watch Masterclass Part 2 in the members portal. And here's a link to the Masterclass videos, by the way. Hopefully that works for you guys. Watch Masterclass Part 2 if you want to learn more about the day trading rule. I will also cover that on Wednesday. All right. Lynn, I will cover that on Wednesday as well, I believe. Chris, $5,000 equal 20 SPX options? Yes, generally speaking. Do you wrap using credit spreads? You can, Karen. I use debit spreads, but it works the same with credits as well. All right. And again, I have a full training on this recorded and in the members portal. I sure hope it is. Let me go ahead and confirm that. It's definitely in the opening playbook members portal. If you have that, let's see. Where is that guy? Well, it's basically the class I just walked you through, but let me see. Huh, it might not be in there. Deanna, I'll just message you in Slack. We'll get that wrap order masterclass added in as well to the members portal for you guys. So if you want to learn more, you can do that. At Deanna, you add. All right, cool. Oh, it's in there, Brent says. I must not be looking in the right spot. So Brent says it's in there. Either way, I'll make sure it's in there if you want to learn more. Now, I know we covered a lot today. However, I do all the hard work for you, so don't be freaked out. Don't sweat it if you're new or feeling overwhelmed. Once you get a few trades under your belt, I really do think this is a piece of cake. That's been my experience and the experience of a couple of friends, family members who I've shown this to. Some of them had never ever traded a debit spread before. And then about a week later, they were doing it all on their own without even asking me. So trust the process, invest in yourself here. I promise you it's more than worth it. And that's just based on my own experience. And I'm having a blast, and I hope you guys are too. Remember, each day in Telegram, I give you a quick market analysis, but then at 9:45 is the first important one. It's our pre-market game plan, our opening range game plan that just tells you the options we could go. It gives you a look at the current 15-minute opening range, and you know those high and low prices. Then I give you the entry signal once we get a close above or below. That also includes the exact options I'm trading. Follow up with the fill prices and profit target, and then update you along the way, all done for you. So that's how it works. I hope you guys are having fun. I'm about to wrap up here for Q&A, but remember, on Wednesday, I'm going to talk a little bit more about the pattern day trading rule, how to get around it, how to work around it. Here's a little sneak shot of how you can get around it and not see that big of a drop off in profitability. So this way down here allows you to never, ever worry about the pattern day trading rule, and you still make about the same amount of money. So we'll cover that on Wednesday. We'll talk about trading with basic call options in more detail if you would prefer to do that over the spreads. And then I'm going to give you a a deep dive into the sweet advantage we have on the options we use. And it's really, really cool. It should open your eyes up. It should help you with some of your other trades as well, I believe. It's really, really cool. So you don't want to miss that. Of course, if you want to catch it early, guys, go into the members portal. It's already recorded. Then you can come to the class with questions that you may have after already seeing the content. And then masterclass part 3, 10-cent buffer rule, building out the full trading dashboard. I'm going to show you what it is. I'm going to walk you through each piece. And then of course, that is already available in your members portal right now. With a one-click install link, you can have that full dashboard ready to roll. We'll walk through additional rules for increased profitability, how we can hopefully make more money. I try and give you guys teasers in the Telegram channel as well. We'll do the 60-minute morning checklist and how to target even more profits on other stocks. So it's going to be a lot of fun and jam-packed. Of course, these are recorded in your members portal for you to review. So now let me open up the chat here and answer some questions for you guys. It looks like a lot of people have already tuned out there. So hopefully you guys are loving it. But for those of you who have questions, let me go ahead and take a look. Karen, wraps under which member site? I have several of yours. Karen, they should be in all of my membership portals, to be honest. Deanna says that they're adding it now in the 60-minute income. So I'm like running low on, my voice is running out on me, but let me get a little water there. And Deanna, once you have it added, can you tell me which bucket it would be under?
Oh, will do. I was going to make it its own little bucket.
The what?
I was going to get its own little bucket.
Okay, you could probably put it under the 60-minute live workshop bucket.
Okay.
Or trade sessions and training would actually probably be better. Either one. But just so we don't get too many buckets going. All right. Can you briefly explain pin risk? Ronald, I'm not sure what you're talking about with pin risk. Um, George, yeah, the worst they can do is say no. They won't kick out. Yeah, I agreed. I ask him probably twice a year to cut my fees. Thank you, John. What is the ideal percentage of account to risk on one trade? That is up for you to decide, Tom. What are you comfortable with? Like I told you guys on Wednesday last week in the opening playbook, my biggest rule for you guys, the biggest thing you should know is before you ever place a trade, look at the amount you put in and then imagine you lost it. Is that going to ruin your day? Is that going to ruin your life? Is that going to throw you off financially? If the answer is yes, you are risking too much. That's how you get a good idea of because what you don't want to do, Tom, is you don't want to put in you don't want me to tell you what's important, what that number is for you. You put it in and then you're looking at it all day because you're fearful that it's not going to work out and you get worried, stressed out, you act emotionally, it goes against you 25% and you exit out because you're worried when that's not what the trade calls for. So we just want to trade in a way that does not get emotions involved, I mean, this trade is really not designed to soak up your whole day and time staring at it. It's supposed to work for you passively in the background and hopefully stack up from there. So I know I kind of gave a whirlwind of an answer there, but hopefully that helps out. Thank you. See, thank you, Eugene. It'll be at 1 o'clock Wednesday, EST, I believe, unless Deanna has other plans for me. Wednesday should be 1 p.m. All right. If you use SPX, they don't count it as a day trade. Katie, if you use SPX and don't use the profit target, aka you don't exit early, it will not count as a day trade. However, if you use SPX and set that profit target, that will be a day trade. A day trade is where you buy and sell a position in the same day. However, if you just buy SPX, don't do anything and let it expire at the end of the day, that is not a buy and sell. That's just a buy. So that would not count as a day trade. And I will cover that in the next class on how you can do that and still see around the same profitability. Chris, why don't the trades appear in one click? Great question. It's because one click can take, it takes 2-3 minutes to get it up there, published, email out to you guys, sometimes 5 minutes. I don't want you guys to have to wait 3 minutes to get these entry alerts. That's why I send them in Telegram because it's instant. So I post it in there. You guys get it right that second versus waiting 2-3 minutes for the cell phone email or cell phone alert to come through, the email to come through. I want these to be on your guys' plate as fast as I can. Nice, Becky. Thank you, Jesse. iPhone, it can expire at the end of the day and it's cash settled, so there's no shares to be exercised. Hopefully that makes sense. Thank you, Dean. Thank you, Chris. Oh man, I got a lot of questions. Oh, thank you, George. You already handled that. Does it make sense to do both XSP and SPX? I would just use one, Alton. The primary difference is SP or XSP is going to be the cheaper one, so it'll be about 50 cents a contract versus SPX is going to be about 250. So whatever, depending on your sizing, if you're using $100 a day, you would do two XSPs. If you're using 500 a day, you would use two SPXs. And then I would not do both. I would just pick one or the other. I should just make that clear. I'll do that on Wednesday. How to increase income? You talk about it next time. I talk about increasing profitability by using different factors that we notice on the VIX. I talk about that Friday, as well as our internals. Thank you, Tom. If my entry price is higher than yours, it would seem to me that the computer model is based on 50% profit on your entry. That is correct. It is 50% off my entry. That is correct. If going 50% off my entry, then that target would be more than 50% above. A lot of 50% is going on there. Sharon, if you, whatever your entry price is, if it's better or worse than mine and you want to go for 50% yourself, take your entry price, multiply it by 1.5. Should that no questions asked, that will give you 50%. I asked a question early before program started about iPhone ease of use with calculators, but also have a trading view. What's the indicator symbol for MMM? I'm not exactly sure how to answer that question. The market maker move. I think you can just go to the options pricing. Let me just show you. It's like here is SPX, and I'm just in the options chain. You can see here's the market maker move, 11.98 for today. XSP should be just 1/10 of that, 1.2. Hopefully that answers your question. Also see up there. Now I'm not sure why those are so different. Maybe this was this morning's when this is current because the day's halfway over. All right, let me keep going. When the trade goes against you, would it make sense to get out with this 70, 80% loss instead of waiting till 100%? Anytime I'd used a stop loss in the testing, the numbers got worse. So you can absolutely do whatever you feel best with. However, the stop loss ended up decreasing my profits overall, so I don't use them. Thank you, Karen. Thank you, Rafi. Do the brokers charge commission on an automatic exit? Yes. Cost per contract. Yes. Dan, with $1,000 per trade, which is better? I would use SPX. You're gonna trade 1/5 the amount of contracts, which means you'll have 1/5 the amount of commission, and more often than not, SPX will fill faster on the exit. Yeah, Chris, I do put them all in the trade tracker, so hopefully that makes your life easy. Do I use limits? I use a limit order on all of mine, but if it doesn't fill right away, when I say right away, 15, 30 seconds, I'm going to adjust that price. Mike, I did not pull that data right now, but I do have to jump off here. I'm about 15 minutes over on my, 12 minutes over on my next appointment today. Let's see. Thank you, Jeff. Thanks, Dan. Mike, we'll have to test that out for fun, maybe in the opening playbook or something. Matt, where do you find that commentary? It should be here. Let me send it to you. Matt, let me know if that link works for you. I think it's like 6 pages, couple of pages on how to get approved. And this is really blown up. Actually, that's not the one I wrote up, huh? But that one should work as well. It's downloadable. Thank you guys. All right. Awesome. Let's see. Already 1 week, made up the cost. Awesome, Larry. Glad to hear it. Thank you for sharing. Patrick says, can't wait for Wednesday. Hey, I can't wait for tomorrow. We're going to have a new trade hopefully tomorrow. And then Wednesday and Thursday and Friday. And then we'll have classes as well. So thank you guys all for being here today. I will see you again tomorrow on the opening playbook at 10 a.m. Eastern. Thank you all. Hope you have a great rest of your Monday. See ya.